So hello and welcome to At the Coalface. My name is Roy Thompson. I head up MHA Carbon Box Financial Advisors. Today I've got with me James Giblin from LGT Vestra. James is an investment manager and has been on with previous episodes. So James, good morning to you.
Morning, Roy.
It's good to see you again. I think a couple of weeks ago we were talking about inflation or the implications of supply chains and how that might play out with inflation over the course of the next year or two. I guess over the course of the last couple of weeks, we've seen oil prices continue to rise. And then thinking of supply chains, we've got the boat stuck in the Suez Canal with lots of containers sitting on board. So I guess those sorts of things may further some of those implications that we were talking about perhaps a couple of weeks ago.
Yeah, definitely. I think it's very much been on everyone's lips at the moment, just talking about inflation and supply chain disruption. And the story in the Suez Canal is quite an interesting one. One of the many things going on in supply chains at the moment. I think just touching on oil to begin with. So it's moved up from around $50 for Brent crude from the start of the year. Moved up to around $70, and so now falling back to being in the mid-60s. The story behind this is very much on the reopening of economies. So a lot of vaccines coming through, economies starting to reopen, particularly the US, the UK, and Europe. And it has fallen back slightly. So touched highs of above $70, but it's really started to move back. Germany's announced some lockdowns. France again going into further lockdowns, and some Eastern European countries tightening up. So we have kind of seen oil prices fall back slightly there.
Okay, yeah, it's and I guess then that so the oil prices, the US and the UK, as you say, sort of major economies starting to ease up. If we think about today, loosening of restrictions here in the UK alone. But what you're saying there is other parts of the world, perhaps in Europe, as we may have read, actually restricting just at the moment. So that's sort of tempering that oil price increase.
Yes, definitely. There's very much two parts into play there. It's the supply chain disruption, the potential disruption of oil supplies, especially with the Suez Canal issue. So the Suez Canal, we've had a massive ship stuck there for since Tuesday. So there's various comparisons in news websites just saying, comparing it to different size objects. So it's slightly bigger than the Eiffel Tower in terms of length. So it is something that you can't really comprehend unless you see it. I've never seen a container ship that big, but it really is gigantic, and it's stuck in the Suez Canal, and I think there's about 500 ships waiting to get through at the moment. And this is a supply route that's 12% of the global economy.
Wow.
And whilst this is another facet of something that's blocking and disrupting supply chains, again, as we said before, we do see these as short-term supply chain effects. This may bump inflation and materials prices in the short term, but again, this isn't a long-term issue. The ship has already been refloated. It will move shortly, and the effects of this will wear off soon. What has been more interesting is some of the, I guess it's been touched upon in some of the previous versions of this, but just general supply chain disruption. A lot of this caused by COVID. So raw material prices going up, shortage of chips. And when you've got a global supply chain that's so interlinked, a lot of them are just-in-time manufacturing. All of these small effects around the world really do play into end consumer prices. Again, we do think these are short-term, but significant effects. I think a good example is the Arctic storms in Texas. These had a lot of knock-on effects into some of the chemical factories that are still going on. Some of these are still closed, and the effects have been to increase chemical prices. So again, these are some of the reasons why we're a bit wary about inflation running a bit hot. But again, we do see these as short-term effects rather than really inflation running away from us over the medium and long term.
So yeah, so if we think about so you mentioned about the storms in Texas and the Suez Canal. You know, it's very easy to read these things and think, well, they're not happening locally to me, but actually they have such a big knock-on effect with the way they play into supply chain. So, but again, you're repeating in essence that these things are short term. We've got a bit of a bumpy road because there's supply chain pressure just at the moment. But over time, they'll ease their way through, and you see it as you continue to see it as a short-term issue rather than a longer-term issue.
Yes, definitely. I mean, you may see whatever you've ordered from China or Asia slightly delayed. It'll be interesting to see how this does knock on the inventory suppliers, which are already low.
Yeah.
But again, as you said, we do see these as short-term issues. They do add up, and they do have effects that do fall onto the consumer. But again, what we see as long-term, that there hasn't been a structural shift that makes us see inflation as continually being high. We do see that if there is high levels of inflation, central banks allowing this a bit more than what they have done in the past. Yes. But again, this is something that we're aware of and we're comfortable with.
Yeah. Okay. So, and anything else coming up in the news that would be of particular interest?
Looking forward, I guess that all eyes are going to be on economic data releases. There's high hopes for massive growth, particularly in the US this year. I think there's some figures, 6.5–7% GDP growth, which is I don't think we've ever seen that in my lifetime anyway. So we'll see how they come through. Them coming in slightly higher again will really help the kind of cyclical parts of the portfolios. Again, it may increase inflation expectations even more. But yeah, and interesting to watch. We'll see how the economic data comes through over the next week.
So I guess if markets are predicting that sort of level of pickup, 6.5% perhaps in the US, as you say, that's really, really high. I know places in Asia have had that for a sustained period of time, but sort of westernized economies haven't had those sort of levels of GDP. Will the market react quite negatively, do you think, if those GDP figures don't come through at those expected levels?
Yeah, parts of the market will. So your more cyclical stocks, your energy stocks, your minerals, your materials. So I guess a lot of the portfolios that make up the UK part of the market. What will do well is some of the high quality growth names, those companies that tick on regardless of the economic environment. So again, it depends on what type of company.
Yeah. Okay. So to watch out for moving forward, the GDP figures, the economic figures that are being announced, still so crucial as an indicator out of this COVID pandemic. So James, really appreciate you taking the time this morning. Thanks very much. And appreciate the time. Thank you.